So hello there, it's Brax FX Aries, and right now I'm looking for, what's the best way to say this? I'm looking for perfect entries for me. Okay. Perfect entries for me. Perfect entries to where I can get most out of whatever I am looking to get. So first we're gonna start off by analyzing what's going on, right? But we're mainly gonna look at where we want to entry at. We're gonna pick our zones. Cause I don't know like entry on places like this right here, but somewhere down here, really. And usually what I've been thinking is like, I'm gonna write this stuff down too in a new notebook so I don't mess up the current stuff I got going on. Okay, this is that one. Great. But anyway, I want to enter on places like this down here. Entry on places like this down here. Or like, for example, this right here. So I'm looking at multiple examples. Okay. Multiple examples of where I would like to entry at. And on each one of those examples, I'll see what they have in common. Simple as that. And what they consistently have in common, that will be exactly what I use to get into my trades with. Simple as that. Everything that's true shows itself and usually proves itself time and time again. And that's how I trade. If I can't prove it or have it show up a lot in the chart, because none is 100%, then I won't use it. There's no point in it. For example, I'm looking at this right here going in my head, like it came down, then this came up right here. I want to entry somewhere around here, right? But I know I can't because it's being made currently, because this could just pull back down as easily as it went up. But boom, right? I'm looking. I see this area, this little area consolidation. And if y'all don't know what the tunes playing are, it's this right here. I love this. Yeah, this Adult Swim bump playlist. If you don't know about that, try it out. Anyways, drawing tools. I'm gonna get a little rectangle here. I don't use rectangles unless I'm teaching. But boom, right? We got this little consolidation right here. Then we got, okay. I'm gonna add this to my favorites. I don't use that. I use like sideways only. I do use the circle, but not for what you think. Then pathing, that would be useful too. That's really it right there. Fib, that's cool. I don't use any of this. Pathing, that. Oh yeah, I love my lines. I don't use trim lines. I'll use a vertical line. I'll use a raise sometimes too, but horizontal line mainly, because I don't like having to, well, I guess it would be good for examples, be specific, but I use both of those. And I think that's all the tools I use. Totally all of them. So boom, all my tools: rectangle, circle, pather, path, fib retracement, vertical line, horizontal ray, and horizontal line. Simple as that. So boom, right? We got this little consolidation right here. What happened? Rectangle, this right here. why am I rectangling this right here? Because you see where it happens at? If I had drew a straight line right here, now I put this in a different color. Like, yeah, see this right here? Then boom, I put a line in between it. They about perfectly sit on each other. Now under here is the liquidity, and above here is liquidity. Text, that's the one I was missing. I knew I was missing something. Text. So I was like, that wasn't right. Yeah, so I don't know if I'm using the right words here. Now this is where things get tricky at, because why would sell stops be down here if they're buying? So buy stops will be up here and sell stops will be down here. I know it looks confusing because we're selling. Since we're selling, if you're looking to buy the market upward, your stops will be down here if you're trying to buy upward. But since you're selling, your sell stops will be above it. Okay. Simple. Yeah, that's actually about right there. Dang. Anyway, you also got this little range right here. It comes right here, and there is no fair value gap down here at least, but right here you'll see it starts from, goodness, this is the 1 minute by the way, but you'll understand it on every time frame, no matter what time frame it is, because they're all the same. But let me actually set this range up correctly. So boom, we got this range right here and this fair value gap. Best way to put this. So boom, this is the first candle, second candle, third candle. Let me put text on this stuff. Real time for you guys. I'm not even trying to, wait, where my text? Come on, bro. Wow. Control Z, Control Z. Okay, great. My text box right there. Alright, whatever. I'm just take my text over here, write it down, and put it over there so it doesn't disappear. Visual order, bring to front. Alright, now that should be right. I'm gonna copy this too. That way I can paste it. Alright, great. I gotta turn snap off as well. Where's my setting? So I'm gonna put these exactly on the candles so y'all can like understand them best. Oh. How do I turn off snapping? I think it's a canvas thing anyway. Let me see if that's what works. Nope. Don't worry guys, I'm gonna go very in depth with this. Make sure y'all get it. Make sure it's easily understand the way I do, the way I understand it. With as much clarity as possible. Cause this is a range, right? And I'm doing all this just so I can see a perfect entry from my understanding of things. So I'm gonna put 1 right there. Slap 2 in that box. Bring it right here. That's so nasty. Like, look at that. Oh, I got. Wait, can I just like space it and push it? I probably could. Yes. That's smart. That's smart. Got it right here. Boom, boom, boom. Still not. This gonna drive me crazy. Come on, bro. Is there no way I can turn off snapping? I know it's like a button out here to do it. Okay. Like that. I know it's one of these. Alright, I think this is it. That's not it. Oh my. Yeah, whatever. I'm not trying to measure anything. I can just press control for that. Not control, but control shift. Yeah. Control shift for that button. Oh, that's messed up. Dang it, that's annoying. I'm gonna have to just play around with it. Oh, this is brought to the front. I mean, can I just tab? No. Tabbing just takes me out the box. Okay, that's the best we're gonna get right there. So I'm gonna copy this box. Slap it in. Oh my. Wait. Make that one though. Let's see how this works. Probably can make the numbers bigger too, just so they can fit perfectly. It's still off by like the hair or so. I just made it worse. Oh, wait. If I just bring it down like to 12. Okay. Okay, that works for 2. Let me put this on 12. Copy that, Control V that. Got that right there. Change the 1 to 2. There we go. All you gotta do is keep trying to find a way. Simple as that. Alright, Control V. Wait. Oh. Control V. Double tap. 3. Oh, that looks perfect. That perfectly lined up. But instead of putting this right here where it looks confusing, I'm gonna put this up here. But anyway, these are ranges right here, and these are for value gaps. It's 1, 2, 3. There's a gap in between these candles right here. I'm gonna delete these boxes now so y'all know where I'm looking at already. My main indicator is for value gaps. So boom, we got 1, 2, 3. 3 candles. There's a gap from here to here. Okay. Now the third candle usually gets broken. That on the. Oh, I should write that down. On the bullish means going up. What bearish means going down. A bullhorn go up, and a bear claw pause downward. Oh dang. So boom, right? On this bullish. Must be over. That's unnecessary. Got 34 minutes on this. This is a profit target. 10% profit. We probably be able to get that by the time this lesson's over with. So boom, right? You got the fair value. You got 1 candle, 2 candle. There's a gap between this third candle and first candle. So boom, right? Price gonna come back down. When this third candle get broken, it should be going upward. Okay. You see? Usually, to me, most times, you can test this out yourself. I'm just talking kind of right now. Wait, why did it get all horizontal? Oh, great. Okay, that's great. That's fine. I'm gonna delete that. So boom, right? You got your candles right here. This fair value gap. There's a gap right here. I said it multiple times. All right, so you're looking for the candles to pull back, be into the second candle right here. It goes the top of this, well, the ending of the fair value gap on the third candle. Wherever the third candle is at, depending on if it's a buy side, that will be at the top, the highest top of the fair value gap. If it's a sell side fair value gap or a bearish fair value gap, that will be the lowest, right? The first candle will be the lowest and the third candle will be the highest of a bullish fair value gap. Okay, so boom, that's out the way. So the top of this candle right here, if price goes above that and closes above that, it should continue upward. If it's a sell side, for example, right here, perfect. Not perfect. I'm still on topic. Don't try me. Anyway, this is also a fair value gap though. There's multiple of them sometimes. And sometimes this is where things get tricky at. Because you also see this candle right here, the boom, right? Alright, so this would also be considered as the first fair value gap, first candle of this fair value gap. This will also be a 2, so I'm gonna take this, move this up, place this 2 right here, move it right here as well. Then this will be the third. So boom, right? You see that? So this is also first fair value gap. This is that, and this is that. But if we go on I'm not going on a 5 minute. I don't even know where I'm at. I'm put a vertical line right here so we can come right back to this. And now you seen the reason I did that. Boom, we go on a 5 minute. Know exactly where we at now. Okay. Now you don't see those candles right here, do you? You don't. But boom, we're going back on this 1 minute. Show you how deep this jump go, right? Got 30 minutes. We are going to trade, and I am going to execute based off what I'm seeing right here. Well, learning from back here. But boom, right? On fair value gap. Which ones I want to use? That's the real question. Which ones I want to use? It doesn't really come back up to this one right here, so I'm gonna use these down here. We're gonna have to use them all. If I go on the 5 minute, it should look even a little more clear, right? All right, let's say this is the higher time frame, right? The 1 minute lower time frame. You see the fair value gap on that time frame, and we want an entry. And we want an entry, right? If we want to enter it to go down on this fair value gap right here, what can I look at to see what would be a good place to start going down from, a good place to try to entry at, right? That's the question. We have this range right here. This will be the highest, where the sell stops will be at if you're trying to buy it, and this will be the lows right here if you're trying to sell it. No, this will be the lows right here if you're trying to buy upward. This will be the highest right here if you're trying to if you're buying, you're going upward. If you're selling, going downward. Sell stops right here, because if it's buying upward, then it's gonna stop you out in this area right here. That's where you have your stop loss at. Simple as that. The stop loss is where you place a line at, and that line is where you get out at if the trade's not going in the direction you want it to. Boom, that's explained. So, right? Oh, right, texting me. So, right, if I want to enter right here, what can I look at based on what I've already did, right? You got this range. This will be the high of it. This will be the low of it. Where's this range spread to? What the? You can say start from this high to this low, starting from this fair value gap on downward. So boom, right? I'm gonna put this in the background because I don't like that. Right, so boom, right? Looking at this high right here, I'm gonna extend this box a little further so we can clearly see more of what's going on. Just in this area alone, right? But boom, we got this little area consolidation right here, but we just opened our box up, right? Center the screen on this. So boom, I got this third candle right here, this second candle, this first candle, right? It ran from this area right here down to here. I'm gonna mark that out too, so we can just have some clarity. So boom, you got a fair value gap right there, so I'll mark that right there. Really, this is the high, and that's the low. And I'm gonna bring this over too, just so y'all can see what's really going on, right? So boom, right? You got this area right here to this area right here. The way it got to this is it made a fair value gap. It made a fair value gap from this zone right here to this zone, right? So boom, it's coming from this zone to this zone. From right here, where could I entry? I see a fair value gap right here, right? Okay, so this first candle. No, this is the first candle. Second candle, third candle. First candle, second candle, third candle, right? So boom. By this being the third candle, I'm gonna just take that off because y'all already understand that. I'm not gonna take that off. But we're gonna use the cause I don't want to confuse y'all what numbers I'm looking at. I'll just point to them every time. That way it's better. But boom, right? If I were to entry right here, I know some of y'all seen it already, but if I want the entry for this to continue going downward, this third candle right here, right? This third candle of this bearish fair value gap. The third candle of this, from this candle to this candle to this candle. I'm gonna erase those so y'all know exactly what I'm talking about and I don't have to keep pointing. But boom. So boom. From this candle to this candle, right? You got time for the ray to come in. This right here. Well, I'm actually using a box because that'll be better. I just gotta change the color of it. But from boom, boom. Turn this out in space. And change this box to white. The text color, the background to white as well. That way it contrasts. So boom, right? Now I'm just back these boxes up now. I think y'all getting what I'm putting down. I can actually delete these boxes because y'all seen the range I'm talking about. So boom, right? You're gonna either notice it or you're not. So boom. So this third candle, right? Since this is bearish, this will be the top of the third candle. So the top of this third bearish fair value gap is where you want to see price break. When price break above this third candle of the fair value gap, you want to start looking to entry. Okay? Listen to me close. You got the, oh yeah, I got this in my notes. I might as well just say what I wrote down. I call it FVG 1, 2, 3, touch, run, break. The third candle get broken right here, right? The second candle get ran into, and the first candle can be touched, but won't always be touched. So boom, right? You got touch, run, break. Then I had another one for it. I made my own names for them too. It's not but fair value gap, but more overly explained by me. Where is it at? It was like void or something I wrote. Yeah, order block, void imbalance, inducement. Never heard word search more amazing. This right here could, that was 38. I thought I had 20. But they probably just entered it because somebody got the 10% profit. That's cool. I can join another random one and restart all back over again. So boom, continue off where we left, which we can't. I like to remove the, I don't even understand this thing right here, so I remove it every time. I don't use indicators. But let's just start from right here. We're on the 1 minute, right? Let's go. You can even see what I'm talking about though. You got this as the one fair value gap, the first candle of the fair value gap, second candle, third candle, right? It breaks. Since this is a bearish fair value gap right here, right? There's a gap right along here. Yeah, I don't do the box. I'll just do like the lines because that looks cleaner. Right. Right. As you see, act like we can't even see none of this right here, right? You see this breaks this candle right here, the third candle, it gets broken. The second candle is ran into, right? Then boom, price continued downward, right? Price never came to touch this right here during this little run right here. But then it goes downward, breaking this candle right here. Then it comes back upward into this first candle. Now, that's the order block. What is the order block? It is a spot where orders are placed and price runs back up to and then continues to sell off again. Now that's a lot to say, so I'm gonna try to simplify. Really? Okay, I'm not going to no more profit. Y'all won't see me teach. 30 minutes or okay, we got 60 minutes right here. Sorry about that. Now this is S&P. Let's see if what I said hold up. But boom, first candle, second candle, third candle. It never broke this third candle down here. So boom, it made another fair value gap. So boom, boom. But this one ain't get broke. So I don't want to confuse y'all, but there's also 1, 2, 3. If we zoom out, we're going downward right now, right? Well, let me not. Let me just speak, because that's a little advanced. So boom. I'm gonna try to mark these out. I think 2 is the right amount. I'm gonna keep these. I need to move one more. Then that's still 12. Visual template, bring forward. Copy. I wonder if I could save those. Great, so we got another template.
And now expresses it musically himself.
I thought I just did that, but okay. It's already 4 o'clock. Anyway. So boom, that's 1. 2. 3. Alright, so we got a bearish fair value gap, okay. Then it came back, it ran back into here, it broke this candle upward. And when you're in a live market, you wait for your candles to close. Don't. If the candle don't close, you don't make no decision. Simple as that. If the candle does not close while you're in a live market, do not make your decision. If you're losing and you get out, that's okay, because you'd probably be right. But if you're winning and you get hesitant, put a stop loss, which I'm showing you. Usually will be somewhere like around this first candle right here, or like the top of it. Usually on the first block, always on the first block, really. That way, if for when price touches it, you get out. Rather, if it's reversing, put it at the top. If you think it's going to continue downward, because it's always going to usually come back to this first block. But if you don't think it's reversing, or coming back upward any, you put it at this spot right here, spot I'm circling. So boom, if it's coming back up like you see right here, like if I just put lines right here, right, I'm still finding my entry. I haven't forgot it yet, but I'm just giving clarity in every way I can. But boom, right, you see this such this candle right here. It doesn't, using this right here, using what we can see, you could mark that candle out, okay. Expect price to probably come back into it because it did made a fair value gap. Okay, we're on the 1 minute though. And it's working on every time frame, by the way. I'm gonna keep going. But boom, right? If I wanted the entry, I could just wait for this candle right here to be broken and entry just right there. Simple as that. Now let's test this. As you see, down here it reversed upward. If it reversed upward, then I have my stop loss right here. See how that worked? Simple as that. Now let's see if right here this happens to come downward again. I'm not trying to be right here. I'm just showing you the concept itself. It came up, well, let's just see. This is the basic stuff. Upward is green, obviously, and red is downward. So boom, this happened. This will be 1, 2, 3. This will be a third candle right here. It don't look much like a candle, but it's a candle. So boom, it's just a very small one. So boom, right, it's coming downward right here. Let's see if it goes downward and come back upward and break this so we can entry. So I'm gonna place a, it's coming downward right now. Okay, cool. Let's see if it continues to go downward. That's all we want to do. Stop loss. 875 right here. Do I think it's gonna touch this? More than likely, yes. But this is for, I'll do 2 of them actually. Just so y'all can see the difference. I'm gonna put my take profit at the end of this range right here. And my stop loss right there for the second one. 15 for both of them, right? Like that right there. Press play. Let's see. Taken out instantly. Now let's see if it takes me out right here or it goes downward. Lo and behold, see that? Simple as that. Now it took me out right here. It hit that. It really did. It went back to it. But once it went back to it, you see it ain't went nowhere higher than that. Not once. Not a single time it went higher than that. Not once. And this is 4 candles that tested this level right, that tested this block right here. It hit it, yeah. It hit it. But did it hit this one? No, it hit the first one. And boom, we made $12.50. Right. You see what I'm saying, right? So for the safest, you put it at the top. Like if I move this from here to here, right? 1, 2, 3. This right here would be in the order block because it's the first candle. This right here would be in the block that gets break because it gotta, if it's gonna continue going the same direction. You don't see this block get break, and this is where you entry. Where did we entry at? We entry right here. I'm putting a horizontal line for that, make that one white. So we entry right there. I'll make this yellow. I'm using white too much. So boom, we enter right here. Then what? It came up, hit this first block, which is what I call an order block. Well, I'm not gonna call that, well, it's an order block. I can't even deny that. That's an order block. Then boom, it did what? Consolidated, then it ran down and broke to this downside right here. Simple as that. So let's see if we can have another fair value gap happen and entry on that as well. Let's try this like 5 times. So we're just gonna let price run till we see a fair value gap happen. I'm gonna delete all this stuff right here so the charts look clearer, and we just witness this. And I already know somebody's saying, wait, there's a fair value gap right here. I see. But like I showed you earlier, sometimes there can be fair value gaps that overlap each other. So let's wait till it start consolidating like we see. Because when price gonna run somewhere, you see, first candle, second candle, third candle, comes right here, consolidates a little bit, and it either breaks upward or continues downward. See what I told you? There's a gap right here. I knew it. I knew it. So boom, right? If this turns green, I'm gonna want an entry right here at this spot. So I'm gonna put an entry position right there. It's going downward, we can sell. Stop loss at the spot that'll be a, let me see, I still got the 1. So boom. Really, you gotta, I hate when they keep my stuff backward. Let's see what happens right here. Mark that one as 2. Mark this one as 3. I wonder if there's like a way I can just copy all 3 of these. I'm amazing. I'm amazing. Press Control, just copy all 3 of them. Why can't I just save it like that? Nope. I'm gonna save all these. Control and drag. Wait, I could have just. Oh, I didn't do that. I can just click this. That's why it's nice to read. Clearly I didn't. Okay, I can't save that from what I know. But we're up 0.1%. And don't compare yourself to other people. That's how you lose. You only can go off what you know. You can use other people to influence what you know, but you can only go off what you understand. And if you don't understand what the other person understands, then you'll simply never get it the way they get it. But you'll find your own way of understanding it, and if it works for you, then that's amazing. Stick with it. Don't follow nobody. Don't even follow me. I tell you my concepts just so if you agree with them and they work for you, by all means go with it. If they don't work for you, I'm sorry, I can't help you. I tried. You tried because you're here. But, hey, let's keep going. So boom, let's see. Oh, okay. It's just reversing. It might go, it might break. It broke. Well, let's just look for another fair value gap. And see that? Another one did happen. Oh, that's crazy. Oh, why I did that? I ain't even trying to get both of them. I'm only trying to get one of them. Yeah, I probably spotted this earlier too. No. I most definitely spotted this earlier on the other one, which was why I wasn't like mentioning it. So this right here, when this pattern right here, when not pattern, but when this happens, this is called a inverse fair value gap, right? So boom. Now it's not going down, it's going upward. So, all right, that's cool. So boom, you got your first candle right here, second candle, third candle, right? It came to this third candle, and what it did, it broke into the second candle. It broke the third candle and ran into the second, and guess what? It held. So boom, it went downward, then it came right back upward. Now let's see if this forms another fair value gap. And I'm gonna do something amazing. I'm gonna do something crazy, right? Now fair value got made again yet, so we just keep watching. Okay, we might have another one being made. Boom, we got another one. So from here, oh, that's so clutch. Pressing control. Oh, I gotta click on the first, then press control. Yeah. Oh, I got a lot of them. I gotta delete one of those. I don't look right. Okay, cool. Yeah. So boom, right? You got another one. Now, I'm gonna do something that you should never do. Over position and see what happens. So boom, right here, I'm gonna click. Ooh, sell. Because this fair value got going downward. But now, mind you, it came into this one right here. Now, usually when this happens, you want to follow the one that's bigger. You got this fair value go from right here to here. This one comes from here to here. So, now you look at your ranges. Are they going upward or are they going downward? Most of them going downward. But now you're about to see something amazing, right? Watch what happens. I'm gonna over position. So boom, I'm gonna set my take profit right here, like I did previously. My stop loss right here. We have 100,000, so 1,000 for 1,375. That's not really much, but it's more than what you got right now, right? So let's see. It's profit in a sense. Let's see what happens. Do you think this is gonna go upward or do you think it's gonna go downward? This was all going downward, but who knows? Let's see. Play. And look at that. Look at that. So did the concept work again? Okay, it's proven itself multiple times now. Only time it's not right. It's not that often. But hey, when you're not right, you can measure it out. You can determine how much risk you want to put on it. Now, I'm just use this simple concept, right? a simple concept. It's very simple. I'm not showing y'all anything. I'm not showing anything advanced right now. I'm just showing this simple fair value gap. Easy, free money. Simple. It gets more complex, but this is the first thing you want to understand. Because this is what you're looking for every time you go into the charts. As a new trader. As a new trader, you look for this gap right here. Wherever there's a gap at, you just instantly focus on it. Because as you can see, I don't know if y'all noticed it or not, but let me just some of y'all probably seen it, but there you go right there. There you go. There you go right there. But this one still came back and hit this first candle, but hey, still got, it ain't never came to that point right there. I'm just saying, you know. So the best spot to have your stop loss will be at this candle wick right here. Simple as that. But you'll see what I mean in a sec. As we start to zoom out. When you zoom out, things become a little bit more different, but it's still really the same. But we're on a 1 minute just doing this. This is small money. Let's see if we can go on a 5 minute and do even better. So I'm gonna delete all these. I'm gonna just save those. So X. Great. So I can delete all those now. So we're on a 5 minute now. Let's wait for a value gap on a 5 minute. Now this is very tempting, isn't it?
I just spent 3 hours in the pool. 3 hours in the pool. 3 hours in the pool. And I became part of the water, and part of the air, part of all the color in the air, part of space. It was me and I was it, you know. And all melted into.
Really?
That's why I stayed there so long. I didn't realize. I never danced.
Right. So we got 1, 2, 3. Now you look at this and be like, wouldn't the risk be like crazy high? Yeah, but funny thing is, right, you can do this. Lower time frame. So boom, right? You got this 1 minute, 2 minute, 3 1 candle, 2 candle, 3 candle. Or this fair value gap, but then you can just go to the lower time frame. So boom, this big old gap right here reduces to this right here. So now I just say this. Well, let's just stay on the 5 minutes and see what happens. Let's do that. We see we got this candle right here, down to here, right? I wonder if I should mark these out. I'm gonna just mark out this gap right here and this third candle. I just want y'all to see how precise this gets. Well, I'll just stop talking, let y'all see. I'll just mark out this gap, you know. I'll make this light pink because I'm tired of seeing the color blue. Or light, yeah, cyan better. Alright, boom. We got this little gap right here. This will be our entry point. So, but let's not entry down here. Let's entry on the 5. Oh. Wait a second. So our entry point will be different and our risk will be different on a 1 minute than on a 5 minute. Let's actually see where price goes to, you know. Let's see where price heads to. I'm gonna put my stop loss right here. Like I said, we're just entering on the minute again. Now let's enter on the 5 minute. My stop loss will be up here. Yeah, let's do it like that. So enter above here. We're selling, so because this fair value gap is going downward. So take profit, probably somewhere right there. Stop loss. Whoa. Whoa. They don't even let me have that as a stop loss. Well, no stop loss. Let's see what happens. But then on the 1 minute, our stop loss will be right here. So that would be $3,125 versus being on the 5 minute and losing $5,000. But let's see what happens. We entry. Look at that. Look at that. It came to this block right here. Let's see what happened on the 1 minute though. So on the 1 minute, we got taken out. On the 1 minute, we were just lost $3,125. But we go to this on the 5 minute, and we still in the trade. Just think about that for a second. Let's see, right? This thing continued going downward. It came back up and shifted upward. Then it went downward again. So does this work always? Pretty much, about always, yeah. Is this a good entry point? Maybe. Cause you can, this is the most easiest way to entry. Now let's see if you try entering here, since sometimes price can come back up to here. Let's do that on this next fair value gap. So boom, usually we enter on the third fair value gap, when price breaks this third fair value gap into the second, breaks this third candle into the second candle, and then usually it goes past the third candle peak, I should say. Usually it doesn't mess with this first candle at all. Sometimes it can touch it like it did here, but even then, you know, the third is the most consistent entry, but you have more drawdown, considering you have less drawdown if you use the first candle. I don't really just entry on the second candle because that's for live entry. Ooh, that's amazing. So FVG, every entry, there's 3 of them. There's 3 entries, right? But your stop losses always in the same spot, all 3 of them. So boom, right? Got your first, second, third. On the third, enter. From 3 going to 2. So when the third candles for sell side, right? When the third candle's high is broken into the second candle, that's where your entry at. And don't write this like 1, 2, 3, right? Write it as each. You're gonna have bullish and you're gonna have bearish. That way you never get confused by it and wonder like, what do you mean? Draw it out. Well, don't draw it out. That'll take a lot of time. But if you're artistic enough to do it. But basically, I'm gonna make the title bullish and have bearish. And instead of like drawing the fair value gap, I'll just put 1, 2, and 3. The symbolize each candle. Right? So the first entry would be when 3, when candle 3 when candle 3, and we're doing the bullish one first, right? So at the bottom it will be 1, then it'll go up to 2, then it'll go up to 3. So when candle, let's not even say it like that. Keep that example. But when candle 4, no. What's the best way to describe this in a way that you will never forget it? Because it doesn't, when price, alright? 1, when price goes down past 3 into 2, entry with stop loss A B, take out the A, it's no A, with the stop loss B below 1. Below 1 bottom. Simple as that. Instead of saying below, let's say at 1's bottom. And if you want to, you can draw like a little fair value gap drawing between beside the 1, the 2, and the 3. So when you're doing this, you can just always see it when you look back at your notes. And one is going to be the common entry. So common entry is right there. All right, and that's bullish. So next, I set that page down and throw it away because this is 1,000 times better than anything I've ever wrote or thought about, because I'm doing it out loud. But boom. 2. Second entry method. Second bullish entry method. Then if you have to start a new page, just write bullish on top of one side and bearish on the other side, and keep it split down the middle of the page. That way you never confuse these two. Alright, so then, right? Okay. Second entry. So let's look at this real quick, right? I'm thinking I can call the second entry it didn't work right here. If it certainly didn't happen right there. It certainly didn't happen right here. But that's the 5 minute, no wonder. You always want to go down on your entry time frame, then do it that way. But it didn't happen anywhere right here either. Ooh. Now, I know y'all looking at this like, wait a second, it didn't happen right there. What's that about, right? See, where could you have entry right here? And, well, this is the little advanced part. You see this fair value gap right here, right? You could have entry right here. And then just held it all the way downward. Because you're waiting for it to hit this low right here if you're using the way I'm doing it, right? A fair value gap happens right here going downward. Where's the last low at? It's right here. So boom, this goes downward right there, right? Now, being new, you don't want to be greedy. No, don't be greedy. Being a veteran, right? These are just entry methods. Just try to safely entry with the least risk possible, right? Because let's say if you buy it right here with this fair value gap and never put a stop loss, this is how much would you lose? I can show you right now. Buy right here, stop loss, 13,000. Is how much you could possibly have lost, right? But since you got your stop loss right here, and you with entry when it's broke downward right here, right? Well, let's see. I think it's going up. We're gonna buy right here, right? That's for example. You lose 1,125. So like, you see what I'm saying, right? And this is where you place your stop if you think you're wrong. That's why I kept that right there. Now we're into the examples where it never came back into this first candle right here. It never did. It never even touched it again. And that's fine. That's beautiful, actually. Because that's where you would usually apply these type of techniques at. If you don't see price come up above this third candle, then you should be safe right here. Let's see that. Let's see that happen over here, though. Did price come above this third candle? No. It didn't. Cool. All right. If you can find another one, you got it right here again. First, second, third. Did this come? Wait, what? Did this come back up? This didn't even break the third candle. Then it went off, made another one again. Did these break? No. No more fair value gaps till right here. Did this one break? Yes. And what happened? Came up. Did it ever hit this block? No. And you would have been great. You could have just kept holding down to here. But that's the thing, though. When you're like exiting and entering, it's not really like set in stone. You have to choose where you want to do that at and what you want to risk based on the size of your account. Like, for example, this guy is up 33,000 right now. I'm gonna show you what happens when you try to like compare yourself to other people. He up 33,000 where I'm at. I'm at 3%, 38%. Okay. So the second entry would be is when it comes up into the second candle. When it comes into the second candle, you wait for another candle going downward to happen, and then you entry, because that means it's gonna continue going where it's going. But it still could be wrong. But boom, right? First candle. You enter when the price touches the first candle and don't break it. Still, again, you could be wrong. And nothing's wrong for being wrong. You can't always be right. You can't be perfect at something you don't know exactly. No one knows. That's the whole point of it. That's how you make the money. If you knew where everything was going, then you probably wouldn't be here right now. And that's cool. But let's see, right? Let's see if we can get another fair value gap going. Then entry in, then go to that one. Then went into it. Now watch what I do. This is only because I'm on here and I'm, hey, I see this doesn't even matter right here. As long as you got the technique right. So boom, we gotta delete all these drawings. We got fair value gap right here. From this to this. I'm gonna use the second entry technique. So it broke into this, it came back to the second candle, right? But boom. I'm not even gonna say take profit. Not even gonna sell one. Just sell. My stop loss would be probably somewhere up here. Now let's see what happens if I get taken out the market. Let's see what happens. I knew it. Exactly what I was thinking. I'm gonna take this right here and set it up to here. Okay, it didn't touch the first candle. Let's see what happens. Does it go up? Yes, it goes up. Comes into this candle right here, then start going downward, right? Now watch how this doesn't even matter right here. Alright, so the maximum lots I can have is 200. So I'ma just have pre-made set take profits, right? I can't do it like that. I gotta set the tick amount. This is at 170 and this price is at 164, so I'm like, that would be 6, I'm believing. And my stop loss is at 72, so I'll make that 3. Stop loss at 3, in case it just runs back up for some reason. And mind you, there is a fair value gap right here. 1, 2, 3. Got right there. Then this is a 1, this is a 2, and that's also a 3. Let's see what happens though. That is not where I want my stop loss at. So this, oh, that's 3 ticks, like 25. Okay, that's cool. So if these are 25 and that'll be 75. So each tick is 25. So 25, 12. Let's see. I did that right. Dude, what? Alright, how do I auto alt shift Q? Okay, that's weird. Really? I know we're breaking this. Alright, came back into this first block. Let's see what happens. Can I sell now at least? They really just blocked me? Oh, that's messed up. I was about to be a headhunter and just take dude out. Bro, whoever that is outright. Now I want to enter right here because I already know. Let me not. Let's see where it goes anyway. I was thinking down here. As I thought. So y'all system broken, huh? Really? Alright, that's 67. And take profit is at 640, that's like 150, 150, that'll be 6. Let's see. Oh, the liquidation is why I can't have it like that. Let's see. Now I'm about to just do this. Oh, he got taken out. Oh, that must sucks. Guess that daily drawdown got him. I hate that jump. Start doing good, they hit you with that daily drawdown. Lost all your profits. Like, no. Anyway, let's see what happens. And like that. Like when you just using the simple method I taught you. Simple method. You can't touch this block, went downward, cool. Using the second one, you can't touch the second handle, and it started going downward, and I'm like, okay, cool, I can entry. I knew it was coming here based on this fair value gap right here. So boom, we got right here, and we're right here, so boom, it goes downward. Simple as that. And who just got 40%? The last guy was at 33%. Now think about that, right? You don't really know anything about trading, and I just show you this one simple, clear thing, and simple as that. But now, this isn't the only nice thing. So, finish writing down your notes, right? Bullish. The first most common entry for the bullish fair value gap. Entry. Enter. When third, well, when, excuse me, when price goes, dang, I shouldn't hit my mic, goes below third candle. Okay. All right, that's rule one. Well, that's concept. Well, that's entry one. Now, I just want to make this clear as day, right? Entry one. Enter when price goes below bullish third candle of FVB. Then for your bearish, enter when price goes above bearish third candle of FVB. That's entry method one. One sec. All right. Second entry, starting from the bullish, enter when price goes into second candle of FVG. Above third candle that's literally the same one as 1. I'm still keep the as 2 because you're using a different spot and a different technique, basically, to be specific. It's not exactly the same, but it's a different technique because you're not entering instantly when it breaks the third candle. Oh yes, I can write like that. Enter when price goes into the second candle, then goes into the second candle, enter when price goes into the second candle of FVG. Yeah, I'm just leave it at that. That's entry method 2. And third, entry when price goes into first candle of FVG. Simple as that. Now the names for each of these, right? So the names for each of them, right? I'm gonna call them, I put 3 of them because they're like 3 different techniques. The first one is the inducement entry. Now the reason it's called an inducement entry because if you enter on the fair value gap while it's going down, then it pull back up, you're gonna be stuck at the bottom. And hopefully your account can hold until you can make it back there. If your account can't hold, you just lost a trade. So the fair value gap itself induced you into taking the trade at the wrong spot. And since you took a trade at the wrong spot, depending on how much you risk of your account, you could blow your account and just be out. So you got induced into it, tricked into it. Alright, so the inducement entry is 1. It's the name of the first entry we will use, which is the most common one. So enter when price goes below bullish third candle of the FVG. That's the bullish one. The bearish, enter when price goes above bearish third candle of FVG. Simple as that. And you'll notice, right, only the inducement one has 2 different criterias that gotta be specified. And then the second one is one that you can use all around. I'll just call it the FVG entry. The void entry. The gap entry. I like void. Void entry. Because price is being pulled into the void. So, you know. That's what I'm talking about. That's a cool title. That's a cool name. Void entry. And a void entry is when you enter when price goes into the second candle of the fair value gap. Simple as that. Now, how is this different from the first one? It's really not. It's just the first one's more clarified than this one. This is like a broader. This is just broad. Number one is like the detailed version of 2, and that's why it's number 1, because it explicitly tells you exactly when to do that. Now, number 3, order block. Entry. Nothing else to be said. You enter when price goes into the first candle of the fair value gap. Now let's make this a little more complex. Well, I'm actually just leave it at that. Actually, I'm not gonna leave it at that. I'm gonna explore more fair value gaps on higher time frames, and we'll just see if this concept works on basically all of them, using each method when it calls for it. Alright, this says 100 right here. Oh, this only got 5 minutes left. Let's see if I can blow this account real quick, or win it. Right, so we're on 1 minute, 15 minute. Delete that indicator. And you notice, right, I ain't said anything about the trends so far yet. I ain't even zoomed up to look at it. So let's look for a fair value gap. Let's do it on the 1 minute. Now the technique I'm using on this right here, right? Since I have like, my only thing is I'm limited to 200 right here. If I'm only limited to 200, and technically I can have an infinite amount of 200 as long as I just place those down. And it's only got 3 minutes left, so it doesn't matter if I win or lose it or not. That's the way I'm looking at it. Let's see what this price is doing right here. So as we see right here, there's this fair value gap right here, right? This one got overtaken. It came back into its first candle and broke it. So now I think everything's going upward. So boom, right? This would have been the third candle. So let's mark that out. Bring this at the bottom right here. About that right there. So this is the third candle. This is the gap. Price traded into this twice and then it ran upward. Alright, cool. So I'm gonna wait for another fair value gap. If I see 2 of these fair value gaps, then I'm gonna try to entry and hit 100% profit of hit 200,000. That's looking like one. Not a fair value gap though. Okay, that's definitely gonna be one. Got entry right here. I'm gonna wait. I'm gonna wait till it like comes down a little bit more. All right, I'm going in. I'm going in. Broke that. So take profit. 4 ticks. 1 point up. Then 200. And this only works on this trainer right here. Alright, great. No stop loss. Alright, let's see. How right can we be? Alt Shift Q. So hate when I press Control Shift Q. Alright, let's see. Oh, I'm selling? Nope. That's not what I'm trying to do. "49 seconds. "30 seconds. Okay, we're about to be at 20 seconds. See if I can exit out all these real quick. "18. No, I ain't placed that many now. Okay, bump it. What? Ah. I was about to go crazy with it. Let me go to another time trial. I mean, not time trial, but profit target.
Spin Master Mugen.
Okay, so this broke below this. Did it ever hit this? It did, but it ain't moved back up. I want some more data on this because it came downward. I don't need no more data. I don't. It broke that. That's all I need to see. So, so what's the buy? Alt Q. Ah, no wonder I did it wrong. Take profit or ticks. Let's see. And I don't like that. I want to risk. I want to show like massive risk and show it's possible instead of just. That's better. Let's see if I can get even higher. That's not where I want it. I might as well just. My target is right here. So that's 826.75 from 88. So let's entry. Let's say we at 75. Our entry is at 98. So that's 26, 28, 28 times 4. How much is one tick actually? So I should figure out. I want to make sure I calculate this just right. How many points is one tick? 75 like I was thinking, so that's 25. So one tick is 25. And I'm trying to get to write this out actually. So I just put the numbers in instantly correct. One tick equal 0.25. I'm trying to go to, let's say 827. I'll go to 821. 812. 812, right? We're at, price is currently at 88.50. 88 0. The phone we're trying to go to 828.5. So that means I gotta do like these. I'm not doing all that on paper. That's the problem right there. I know this can't be right. 400 was less than that, so I'll do 232. Oh no. I did that wrong. 40. How the world could that? I know 40 ain't gonna be right, but I'm just show you what I'm talking about, because I'm like, watch this. See? That's what I mean. That's only 10. That means times 4. That's not right. But I might do be right. That's 10. So 1. 2. Albin. 2. This right here would be 3. Albin 300 right there. Matter of fact, that's actually not a bad spot. I'm an idiot. It's 120. Oh my! I wasn't thinking. I really wasn't thinking. All right. All right. So that's 120. So it's 40 times 4. All right. So. 160. Yeah. I knew I wasn't tripping. I'm like, where'd they get 232 from? I was like, huh? How you get that? I'm gonna do 161 since we're at 50. And that should be perfectly there. Or one below. I think one above. Yeah, one above. Let me see how many we're off by. I want this exact tip. I just gotta take the one, I think. Nope. Totally wrong again. It's just gonna take a while. I'll go 150. Really? This is 150. 150. 53. 154 is. I know that for a fact. Let's see if I'm right. There we go. There it goes. Now, Q. I'm just about to break this thing, isn't it? I don't see this number right here. Hit 1,000. I wonder what happens when it reaches 99. Seems like it's lagging. So let's see what happens. Oh my. Oh man, that's just crazy. I broke it. But yeah, it works. I could end it on that, but nah, I'm not. It didn't even hit. It didn't even get to reach my take profit before I even. Man, I'm gonna go on the time trial and do that. Just so I can see like, this is what works. This is what's possible. I'm gonna go to one that's about to end. 47 minutes. Yes. Great. And as you see, there's not one single indicator on my chart. I think this is going downward. Let's see. Yeah, I knew it. Bro, that third candle. And I think it's gonna go down again. No? Yeah. Yeah, there it goes. There it goes. Make it for a very gap for me. just pause this real quick. Alright, I've unpaused my recording. So, anyways, I took too long on that. My apologies. Well, yeah, I didn't realize how long I took, but yeah. To everyone who thinks I'm ruining other people's times on here, yeah, it's a battle. So whoever can do it the best or the fastest should obviously do that and make other people realize like how fast they can actually do stuff, you know? Let's see. It's just friendly competition. Okay. I knew it. I just had a feeling about that. I'm like, yeah, it's gonna come back up to around this one right here. Is it? Can't break yet, but let's see what happens. Okay. I might get taken out. Nope, I just won it. And that's fine. Simple as that. Now, there's a way to not get taken out. And I probably just missed and showed you that if you just realize what I said. And see, it's literally that easy. Too easy. But yeah, that's how I use fair value gaps to trade. And then I'll give you something else actually. Just cause why not? Give you another little tool in your belt that I've learned from my perspective. I didn't make these things, it's just the way I see things and order them to my understanding. And notice, like, I ain't looking at nothing else. I'm just looking at what's currently going on. Simple as that. Nothing more, nothing less. Just keep watching. Waiting for value gaps to be made. And just seeing. 100. Simple as this. Damn. Oop. See, this is why stop loss is important. Oh. Yeah, that's not it right there. See, now we're down pole 5,000. Let's see. This is going downward now, so. And that's not bad. Let's take profit down this part right here. See what happens. Oh. Blew the account overdoing it. Oh man. Guess what though? You can always just trade again. That's why you should put your stop loss on. That's why it's not good to like overtrade. I was hoping I'd been wrong a while ago, but sheesh. And I'm just mindlessly doing this now. Just for the heck of it. And just watch. Just mindlessly doing it, not even trying to know what's possible. I don't like how it's put my stop loss right there. Yep, went over. River got boom, boom, boom. It came and equaled out this area right here. When that happens, you just follow the latest one. Simple as that. Another one about to be formed. Watch what I do to this, right? Ooh, that looks perfect for what I'm trying to do. Now, if you paid attention, you'll see exactly what I just did. Exactly. Now, I don't know if you noticed that or not, right? That's why I say this, right? I waited till it went to the order block, then I entered right there. Even though it took me out on the first time I tried it, I went to the second one on the red side because it never went above it. And that's usually where you should place your stop loss at. I'm gonna stop now. I'm just showing off at this point. But yeah, sometimes you lose, sometimes you win. But at least you're not losing everything, and that's why you should risk properly. Like you don't want your whole count gone if you just miss one trade. But that's what I'm doing because, I don't want 5 times and lost one time because I know that. So yeah, that's all I'm gonna show you on Fair Value Gaps and how I entry. If you like this type of content, just like and subscribe and keep following. Peace.